All right, guys. So I owe you guys a video on this channel. We haven't uploaded on this channel in quite a bit, but you guys in the streams have been mentioning that you want to see more of it. You want to talk about more of it, and that's totally cool. And obviously, this channel is really just going to be in the future stock related and football related. So that's probably a little bit of it. Like that's really all this channel is going to be. So yeah, if you guys enjoy it, just drop a thumbs up. I mean, it's tough for me to really like explain some of this, but I'm assuming most of you guys watching these videos are into the stock market, messing around with it. And if you guys want a video, maybe just on a little bit more of like a tip or tutorial, I mean, you guys should go back. I have some videos on this channel a little bit longer that are kind of like stream re-uploads that are really good to start understanding like how to maneuver in the market and stuff. Again, I'm not responsible for anything in this video. Also, this is not even just advice. This is just me showing you guys what I've done. So a lot of you guys, and I had told you in the stream that I was going to explain to you my portfolio and kind of that sort of stuff. Now, I'm not comfortable really sharing the amount of money just because when the internet starts talking about your money, it's messy, right? And it's unnecessary. So what we're going to talk about today is prices and returns and amounts of shares. And if anybody wants to go through and evaluate how much money it is, that's great. But for you guys, I want you guys to see kind of what I'm doing, when I'm buying, how I'm buying, and things like that. And we'll start doing weekly videos for you guys that are interested on the market. And then obviously when the weather gets better, the football videos will be back. And I think we're actually looking to enter into a football league this summer when COVID gets better. So that will be some great content for this channel. And so, yeah. So really, guys, this video is going to be talking about 2020, 2019, 2018, when I started investing and kind of going over my portfolio. I can't directly show you my portfolio, but I use the service Vanguard. I've been using them for 3 years. I really like them. I started trading in, let me see the date because I have it to my left here. So I started investing in, let's see. I started investing in, hold up, 2018, July 2018. That's when I started investing. And I didn't start investing with all that much. I mean, it was a decent amount. It was definitely a couple $1,000s, but it wasn't anything insane. And so for me, I saw a huge investment return in 2019. I did about 20%, 16.9%. And then this last year, I did 23.9% gain. So those are my gains for the last 2 years in the market, which is great. I think anything above 5 or 10% is phenomenal. So really going ahead and taking a look last year, the biggest wins for me last year, and I'm going to go through with you guys right now, and I'm going to pull up right now my 2020 realized gains, and I'm not going to show you guys exactly the numbers, but we're going to talk about the stocks. So first of all, the market obviously grew a lot last year, and so what I did was I was in, I don't know if this has it, this ticker here, but these are Vanguard. Basically, Vanguard offers like specialized funds. And so those were just growth funds. So basically, I had a great return on the growth funds. The return was probably about 20%. And basically what that is out of my paychecks every month, I was investing in something that was very similar to like a Dow index, a tech index. Obviously, tech grew a lot last year. And so they're basically smaller stocks than these overall stocks, but they compile groups of stocks in one. So for example, I have a index Admiral shares and I have an index fund Admiral shares, right? And both of those grew a lot in this last year. So something that I did really well with, right? AMD, I had over 100 shares in this company, and I initially bought into them at 50. Now, the reason that I initially bought into AMD was I'm obviously, as a streamer in the tech industry, I see a lot of what is going on in the tech industry, and AMD has some amazing chips. So I knew that they were going to grow eventually because their product was so good. Their product was a really, really, really good product. So yeah, I mean, I bought in a little high, right? I bought in here at this 50 mark, but look at it now, right? It's up at 90. And one of the main reasons that I had bought into AMD so heavily was because of NVIDIA. All right, NVIDIA is also a graphics company. They do a little bit more than AMD. However, all right, the thing with NVIDIA is that they were valued so much higher, right? At the time when AMD was 50, NVIDIA was 300. So I thought NVIDIA would keep growing, but I thought that would also mean that AMD would keep growing. So I did very well there. I've actually sold a lot of my AMD I've sold over 100 shares of AMD now at 97. I still do think this company will push over 100 eventually. So I've kept a bunch. And something I learned with the stocks market is always keep some of your investments. Never sell them all. This is not a fully realized gain, but I think you guys can tell by some of the previous videos, maybe my streams. I am massive on Amazon. I'm so big on Amazon, and honestly, I have probably invested about 10 to 15% of my net worth in Amazon. Now, my initial investment with Amazon started at 1,500 to 1,400. I even bought more at 2,000, and then I've actually been buying. You'll see with Amazon, there's an interesting kind of trend they do where they go from 3.1 to 3.5 a lot. So I kind of keep averaging in at 3 to 3.1. You guys can see here, I mean, the technicals and the analysts recommend selling. I think Amazon is not a company that is needed to be sold. I think this is the future still. I really believe in this company. So I've only taken a realized gain of, I think, 2 shares out of the, I don't know how many total I own, but I have at least 15 now, maybe more than that. Probably closer to 20, and I've only realized and unrealized means that realized means you're taking the gain. Unrealized means that you're not taking the gain, right? It just means that that's your profit at the moment if you were to sell. So on FIFA, if you have Ben Yedder at 254 and he's 280, and you haven't sold him, you have an unrealized gain of, let's say, like 20K, but your realized is when you sell it, if that makes sense. So yeah, that's done really well. I'm gonna kind of go over some of the big stocks, guys, that have done well for me this year. American Express is a great credit card company in the U.S. They have very high security. And the good news with American Express is that now they're being accepted a lot more, whereas like they used to kind of be limited, right? Because I think a lot of retailers, they have to pay a fee for American Express. It's a bigger fee on every purchase. So a lot of items that are $4 at stores, they won't accept American Express because the charge is like $5. So the store is not even making money. That's why a lot of the MasterCard, Visa, but I think they're being worldwide a little bit more accepted now, and I have been buying into American Express between like the levels of 90 and 105. So I've just done well with them. I have like 95 shares of them. I've made just over $1,000 on American Express. It's nothing insane, but it's a company that's been doing very well as a long-term just growth kind of company. And obviously you guys can see they pay out a dividend. So they're a company that's very stable, which I like, and I'm all about stability. Now, Alibaba is another interesting company. We talked about this a lot this summer. This company is going to one day, in my opinion, be worth a ton, and I still believe it, right? My initial in this company is 220 to 240. I took some money, some cash, some win at 315, and I actually bought more at 250. Right now, it's 243. This company, though, unfortunately, it's Chinese, right? So a lot of the regulations, there's a big regulations situation with Alibaba, right, where they're depending a lot on China law in America and things like that. So that's another big thing. Something that I've done really poorly on, right, guys, really poorly on, was weed stocks. And I actually sold like 80% of the weed stocks because I just stopped believing in it, right? And I lost about $600 on weed stocks. And to be honest, it's only grown. It's literally only grown. So now it's at 34. So this is very high at the moment. And this is why you probably never sell, although I hated the wheat stock at the time. And I think this is around where I bought it. So it's only at about a break-even point right now. But this is one of the few times I've lost in the stock market. And that was with this company. Now, another company that's really interesting, that's a big part of my 2020 portfolio and something that I did really well on was DraftKings. DraftKings was a company that I think IPO'd this year. And they had an initial massive spike, right? And I had basically bought the mini dip here at 33. How did I know that was a good buy? I bought about, 58 shares at about 33. The reason I knew it was good was because this company was being advertised everywhere and people were bored during quarantine. So I knew that there was a lot of hype right now. There's a ton of hype if you turn on your television regarding gambling at the moment. Gambling is such a big deal everywhere at the moment. So that's how I knew that this was a really good stock. That's how I initially started with DraftKings. I actually rebought in at DraftKings at 44, I think 42 or 41 the other week. I think it was around right here, somewhere in here. And now they're back up over 50 again. So we're just talking about realized gains at the moment. That's really all we're discussing, guys. Nothing too much more than that. DocuSign is another company that I've taken over $1,000 now in a realized gain with this year. The reason why DocuSign is doing so well is because electronic signatures right now and things like that are doing very well with this type of work environment. I expect this company to continue to grow. I actually keep buying this company at 220, and I keep selling them at 250. So they keep kind of trading in that margin, although my initial was like 200, and I was able to sell like 240. So they're trading in a nice little margin right now. That has been really good to me this year. Facebook has been good to me. I still think Facebook is undervalued. I think some of these Facebook, Twitter, some of these stocks took a little bit of a hit because of the whole Trump situation in the last couple of weeks with them silencing. But I think at the end of the day, it actually, for me, makes me like the stocks even more because I think it makes me realize how powerful these social media companies are, right? And they really do rule the world. So expect Facebook, in my opinion, to be relevant for more years to come. The thing is, right, in my eyes and the way I look at it for the future, Facebook is not the most relevant thing anymore. Facebook owns Instagram and Facebook owns WhatsApp, right? WhatsApp is the biggest thing right now in my eyes. It's like one of the biggest apps. I use it to talk to all my friends in Europe. It's massive. So the fact that they own those two companies, it's crazy, right? So I do think Facebook has the hype long term. And this year, I was able to profit on Facebook of over $2,000, right? Because I had bought them at really nice times. And I think my main, if I look at Facebook, for my buys, let's see where I bought them at. So I bought Facebook at, let's see. Oh no, I'm not on a cost basis tab, so I can't see the buys. But yeah, 34 shares traded this year. So that was good. All right, next up, we're gonna talk about Google. Google. Okay, so Google is a stock that I think is still undervalued. But Google was really good to me. I've taken 14 shares of realized gains in 2020 of Google, netting over a $5,000 profit in 2020. Now, the buy zones on Google for me were always in the 13 to 1500 range. And I did take some money when they hit 1830. I thought that was really high. But again, long term, I still think Google's going to be over 2K. We talk about these marquee companies. Google's one of them. Google owns so much, right? So much. And they have so much. So they will continue to be very good, in my opinion. That's a company that I really do like long term. Yeah, Goldman Sachs, another one. This is a banking company. I've actually taken a loss on this. Now, I made over $1,000, but the reason I'm saying I've taken a loss on it was because it's valued right now at $300, right? My initial was $200 and I sold at $240. So it's now $300. So I've literally missed out on probably $3K of profit, but that's how trading goes sometimes, guys. You cannot hit everything. Let's see. JP Morgan is the same thing, just another bank that grew a lot. Will continue to grow. We'll talk about some more of these stocks in our market watches in the future. But again, JP Morgan, really nice dividend. And that's why it's important to own stocks with dividend yields, guys, because you'll just make money. I think in 2020, because of the stocks that I own with dividend yields, I did close from between $5,000 and $7,000 of profitable gains off of dividends. Now, you still get taxed on that stuff, but that is you getting paid basically for owning the stock, which is awesome. Awesome. Lululemon was a company that was really good to me this last year. This is a company that continued to grow, and their clothing is unreal. I'm actually wearing Lululemon pants right now. I wear a lot of their clothing. At first, I thought it was really like snobby, kind of rich boy clothing. It is very comfortable clothing. It is no surprise to me right now why they are doing so well. Their product is unbelievable. They're at an all-time high at 350, but this last year I took over 33 shares of profit. That was really good. This was a company that just did very well. Two companies that I talked to you guys about a little bit when I started doing these was Microsoft and Sony. And since we started that discussion, they've really only held or grown. Microsoft is still 220. But the thing that I told you guys is that when the PlayStation 5 comes out, Sony will be above 100, and they got over 100, and that's all we could ask for. We've taken some really nice profits on Sony in 2020, man. Sony was really, really good to us, and that is because I believed in it since the beginning. I'd been talking about Sony, and I've been buying in at Sony since $40 on the share, and this is a perfect example of believing in a company and seeing what they can achieve, right? When I had bought in initially at 40, I actually sold someone to hit 72, but I've been buying more and more and more at 60, 70, 50, right? Getting that 100 all-time high right now for Sony, right? We're seeing a really nice all-time high on Sony. Shake Shack is a company that did really well, surprisingly, even with a pandemic. It's actually 111 right now, and I sold most of my shares at 100. But I had been buying Shake Shack at the 40 range, man. It has tripled since coronavirus, which is crazy to see. Again, another company with a really, really good product. So no surprise here that they have done the best. Now, in terms of my realized gains of 2020, my most successful realized gain was SQ Square. This company's unbelievable. Cash App, all that good stuff. Take a look a little bit more into this company, right? They actually hit 250 the other day. They're down at 227. This company was unreal, and I actually probably even sold a little too early because I sold a lot of my SQ at 180 to 200, but my initial end in this company was 100, 110, 120. So really good to me. This was a company that did very well in 2020 for me. A couple other companies that did really well for me was Uber. Uber was a big one. Lyft was also a big one. I'm trying to look through Spotify, T-Mobile. Let's see what else we got in here. PayPal, Visa, UPS, Zoom. Zoom was a really good one. Zoom I've not made a ton on, but a decent chunk, and it's because I thought they would continue to grow. And I still think we'll talk about Zoom in a second. I still think Zoom is a really a company that really will probably keep doing well. But yeah, Uber here. Uber's done. Uber I really started to buy into probably at its. This is one of the only stocks that I ever got the lowest on. I bought, I want to say, a couple $1,000s of Uber when they hit 26. There was a point, 23 to 26. There was a point where they hit 40, and then they actually went so low. This was it right here. Literally, this was it. And I had bought more here, and then when they went all the way up here and then dropped again, I bought more here. And they're at 55 now. I don't own too much more. I still kept some, but I don't own the value that I had before. But man, Uber's done so well, and that's because Uber's the future. Uber is so accessible, such a good company. And then so I traded in 3 accounts this year. I traded in a brokerage account, I traded in an IRA account, and I traded in a SEP IRA account. Now, a SEP IRA is when you're self-employed, you can deduct more money into that, so you get another IRA. You can deduct a little bit more in there. The difference in all of these IRAs is that the IRAs, they're only taxable, I believe, when you take the money out. So it's really retirement money that you're not supposed to touch. So yeah, I mean, this is kind of what I was messing around with in 2020, guys. A lot of tech. And we'll probably do another stock market video when the market opens this week, probably Wednesday or Thursday. You guys could expect that when I get some time. Obviously, this is not my priority for content right now. But 2021 is going to be an interesting year. I think 2021 for me, I'm going to be most focused on taking some more wins in the next couple of weeks because I do think there is going to be a huge downtrend in the market in a couple of weeks, maybe end of February, maybe March. I do think the market is going to go down quite a fair bit. Don't really ask why because I don't know. I just kind of feel it. But I'm going to be looking to really get into some retail, some airlines, some retail, some of these stores and things that I believe will be prospering and back open by the fall. So I want to get in ahead of time because the way that that's going to work is that a lot of people will hype that stuff up and that stuff will really, really get high and inflated. And we will sell then, right? It will probably get the highest before some earnings and things like that. But yeah, we will definitely take a look at that. And I think one last thing that I'm really interested about is Bitcoin. I have done nothing in crypto. So I'm kind of starting to watch crypto a little bit more. I watched the video on Bitcoin and I understand it a lot more. I think Bitcoin now makes a lot more sense to me, than it used to. So I do see a future with Bitcoin. I don't think it's going to be implemented for another decade probably. But I will watch this because this does trend very, very interestingly, right? It's very, very volatile. So yeah, man, thank you guys. And, I'll keep you guys posted, but thanks for watching, boys. Peace.